Hey guys, welcome back to another episode. Today we're going to take a quick look at Disney. Stock price is down after reporting earnings. So in today's episode, I want to take a quick overview of what happened to the House of Mouse, and why is the stock price down over 10% in the past 5 days. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment where I have 10 free stock ideas for you. And I also have my presentation as a free newsletter where I share my position size and all the companies I've been reviewing in the past few weeks. So let's get right into it. And like I said, this is the presentation. Let's understand what happened to the House of Mouse. So Disney reported earnings on November 10th after the market closed. Unfortunately, they missed analyst expectations in Disney Plus subscribers. I think this is a bit weird. I'll explain why in a bit, but they missed on subscriber growth. They also saw a decrease in life experience margins. So like their theme parks and stuff saw a decrease in margins due to things like increased wages and extra expenses, right? And finally, they also kind of missed out on revenue. So all these stuff really drove this company's stock price to drop over 10% in the past 5 days. But we can see from its 52-week high, this closing, the stock is down over 20.9% at the moment. And Disney right now has a market cap of roughly $290 billion. So let's just jump right into it. Revenue was $18.5 billion. And this was up 26% year over year. Remember, same time last year, COVID was affecting this business heavily. So one of the biggest growth that they saw was that park experience. Theme parks were kind of close same time last year. This year it made about $5.4 billion this quarter, and it was up 99% year over year. And that's where a good portion of the revenue comes from, but the biggest portion comes from media and entertainment, and that was $13.1 billion, and it was up 9% year over year. So you can see, right, people are moving from maybe less media entertainment to trying to go to more outdoor experiences. At the end of the day, Disney Plus had Disney in total, they have Disney Plus, they have ESPN, and they have Hulu. Out of all of them together, they have about 179 million subscribers. That is insane. Disney Plus alone has 118 million subscribers. I think analysts were expecting somewhere of 120 something million, so it was a miss there. But I want to say the CEO did warn of a slowdown in September, so that's why I'm a little bit confused. A few months ago, early September, CEO came out with he did a presentation for a bank, and he said, "Hey, our Disney Plus subscribers are going to be in the low single million digit growth this quarter." So I don't understand why analysts were overestimating this subscriber growth, which I thought was a bit weird. But Disney Plus, 118 million subscribers, and that was up 6% year over year. ESPN was 17.1 million, and that was up 66% year over year. I'm guessing now more sports are also coming out, so more people are subscribing to ESPN. Hulu had about 43.8 million, and that was up 20% year over year. So these are seeing some strong number growth for sure. So now let's take a quick look at some highlights from earnings. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. First thing I do want to say is they're focusing on Disney Wish. This is where a good amount of capex money or expenses is going to go into. And Disney Wish, for those not familiar, it is one of their newest cruise lines, and this cruise line is pretty much a theme park on water, right? So this is where they actually, if you go to disneycruise.com and take a look at the Wish, they show you everything about it. And this is expected to start on 2022. So that would be pretty exciting for sure, right? So that's one highlight. Another thing that they mentioned is Disney Plus is expected to have peak losses in 2022. So right now they're still getting set up. 2022 will be their peak loss for now. And then from there, they should start seeing less and less losses, and unfortunately finally become profitable. They also, even though Disney Plus as a whole is still very small, this is what a lot of investors are super excited about. So I'm really taking a look at their growth plan. So one of their biggest growth plans right now is trying to get new users through new promotions. So right now, for I think for the first half of November, they have a promotion where you can get the first month for $1.99. I do believe this is going to bring a nice amount of people, at least in the short term of things, to get hooked into Disney Plus. They're also trying to shorten the time between theater and streaming. So they're still doing theater releases. And the reason they're doing theater releases, they obviously want to keep the big box people happy. The theater management happy, but they're also kind of using it as a study to see where is viewership and where are the customers. Are the customers still going to theaters? It's kind of like a real life analysis happening right now. But they're shortening the time because they know that people are still streaming some of these movies. They do mention that they're expected to see there's plenty of shows in the pipeline due to COVID lag. And many shows that were expected to release, for example, this upcoming quarter, have been pushed off to later date because of the slowdown last year that, hey, they had to halt production, they had to halt things just to get these shows started. So they started later than expected. So they will be released later than expected. So now some things to note. The CEO did warn, like I mentioned, he mentioned that there was a slowdown in September. But he believes there will be a slowdown in subscriber growth for Disney Plus until the second half of 2022. And the main reason is to that COVID lag of shows, right? Most of the good shows that a lot of people are expected to see are not coming out to the second half of 2022. So something to keep in mind of. Some other stuff that we did see a few downgrades on price. Here we can see one of them. Price target to 175 from 180 due to slower ramp in profitability. Neutral rating kept. Another one decreased price target. They decreased to a downgrade from overweight. So we can see some analysts decrease price targets, others decrease the actual rating. That might also be causing a bit of bearish sentiment towards the stock. What am I liking, right? So I'm actually liking their technicals right now. So I do have Disney in my portfolio. I think it's one that I don't. It's one of those positions that it's a stable holder in my portfolio. Huge fan of their streaming content. They have huge outdoor experiences, right? I mean, I wouldn't bet against the House of Mouse. In current prices right now, I believe it's very, very attractive. And this is me looking at my 3-day time frame. It doesn't look overextended. I believe a good portion of the risk has been eliminated. Normally when it's around this time frame right here, and this moving average, this is very, very good opportunity to buy. So I'm liking it. So for me, this is more of like a high to mid dollar cost average position at the moment. If we also take a look at forward EV to EBITDA ratio, let me see if I can zoom in for you guys. We can see right now the ratios are cheaper than it's ever been. Obviously, the company is expecting maybe less profitability, so this can change as analysts move their expectations a bit. But it's looking very, very attractive both in technicals and fundamental valuation metrics. What else do we have? Another thing I wanted to see is Disney Plus is actually on the top 10 daily grossing on Google Play for November 14th, 2021 in certain countries. And I have it here on Google Play, November 14th in the United States. Disney Plus is the number 10th highest grossing and it's the 7th most daily downloaded app for the day. So we can see that promotion is probably helping a lot. Here we can see in Canada, it's the number 3 highest grossing and it is the number 6 most downloaded. Here we have in Brazil, it's the number 8th highest grossing daily app. It's not on the top 10 downloaded. And then we have here United Kingdom, it's the number 5th on grossing for November 14th, and it's the number 5th for most daily downloaders. So we can see it does seem like people are still coming into Disney Plus. They just recently released a few new movies on the streaming platform that is probably bringing new players or new people into the app. So like I mentioned, this is a company I do own in my portfolio. This is a tier 2 stock, and with the current price valuation, I would do this as a mid to high dollar cost averaging if I wanted to enter the stock. I mean, obviously there's risk with any company. There's risk. We saw that slowdown in subscriber growth, but like I said, Disney Plus is not a house I would bet against. So take care, guys. Have a good night, and see you next time.